Okay, we're hearing the top for gold is in $3,500, and that's it. So pack up your bags, rally's over. Or is it? We haven't had a whole lot of time to talk about that new all-time high of $3,500. Hit April 22nd. It's a fun number, but part of the reason we didn't talk about it much is it was pretty short-lived. And if you look at a 60-day chart, we'll come back to that in a minute, you'd see two peaks at 3420. And both of those peaks immediately bounce back down to around 3250 or so. Now, if you're into technical analysis, you might point out that that's a double top. Makes you sound smart. A double top tends to signal a trend reversal. Now, if you're into practical analysis, you might not need those charts. You might be saying, hey, there are a lot of obvious factors telling us that $3,500 is probably our short-term top. Probably. Now, we don't really get into calling the tops. The only really important question here is whether the rally is over. Now, gold hit that $3,500 just long enough to put that number into our head, but gold hasn't really traded there long enough to really impact any of us. So if it is a short-term top, we still have a little ways to go to get back to it. That's still 7% higher than where it leveled off. So let's get into some of the negative stuff. There are a few headlines popping up recently suggesting the rally is over. This one's based on an interview on Bloomberg with a Bank of America analyst. And we should just say to begin with here, anyone suggesting the rally is over is going to get more attention because it goes against recent popular opinion. But the analyst isn't saying he thinks the rally is over like some of the headlines suggest. He's just pointing out that the traders are all long on gold. That's the current state, and we might have seen the near-term top because of it. He points out that gold has been one of the top performing assets in 2025, and that's actually part of what he's saying it has working against it. He thinks it has time now to consolidate. Now, something that's buried in this is that Bank of America forecasted $3,500 as a target by the end of 2026. So think about that for a minute. Gold hit that target 2 years earlier than Bank of America expected. I think that says something. So if we hit $3,500 2 years early, their models calling this a short-term top shouldn't be much of a surprise to begin with. So let's widen the view here a little bit and look at what's going on with the rally. I mentioned the likely seasonal weakness a few weeks ago. We did see that, but then we also got a bump on the Moody's credit rating downgrade. That makes treasuries a little bit less exciting again, and that helps gold price. But overall, there isn't much pushing gold price up. June and July, they're historically slow months for gold, so there's less buying activity. We're talking trading, not necessarily physical, but without some kind of new global conflict, most of what's happening in the world has already been priced in. So to the extent that nothing gets worse, prices almost act like things are getting better because the bad news falls out of the headlines and the rush to the safe havens just loses a little bit of zip. Okay, quick shout out to channel sponsor Summit Metals. If you're looking for gold and silver, they have a fantastic place to get them, summitmetals.com. So if we're looking at $3,500 as a short-term top, the key there being short-term, and I think that's what it is, we're probably looking at sideways movement in the $3,200 to $3,400 range. But at some point, a pullback to $3,100 or even $3,000 wouldn't surprise me. If we see that 10% pullback to $3,150 or 15% pullback to $2,975, I mentioned those as triggers, I will buy extra, but outside of that, I'm pretty much just coasting for a few months, waiting for a restart on the rally. I don't know if that's late August, early September, who knows? But in the meantime, discount on purchases. The consolidation that we're seeing right now, if that's what we're calling it, is a good thing. It sets the stage for a more sustained move later in the year and gives us a few months to pick up gold at a little bit lower price. Okay, we looked at a headline giving a negative outlook for the price of gold, so let's look at something from the other side. We have JP Morgan analysts suggesting the price of gold could run to $6,000 an ounce in the next 4 years if just 0.5% of U.S. assets held by foreign investors roll into gold. And that's something we're seeing now. It's something that's already been pushing the price of gold up. It's an 80% jump from where the price of gold is today. And part of the reason for that is what I mentioned in my last video about mineable gold being harder to surface. So any extra demand isn't easily offset by additional supply. Now, this idea of foreign investors rolling out of U.S. assets, that's not alarmism. The tariff volatility has spooked people. This is the European Central Bank VP talking about some of these new uncertainties. I'm not making this up. And some of this could have a lasting impact. Now, we aren't talking about the world selling all of their U.S. assets, all foreign investors rolling out. We were just talking about 0.5% of foreign investments moving away from U.S. assets and into gold. That was the scope that the J.P. Morgan analyst gave. And this is really the big reason you might have gold as a defensive asset. It works well as a hedge against the dollar and U.S. assets. So when you put it in that light, the short-term moves for gold, whether we've seen a short-term top or not, whether we're going into a slow season for gold, well, none of that really seems relevant to the wider picture. The current performance for gold, it's been great, but the part that we don't see is the defensive component, the part that kicks in only if things really go off the rails. Now, if some of these unlikely but definitely significant events hit, I doubt gold is going to care what month it is. It's going to run at a completely different pace. So it's worth considering those what-if scenarios as well, at least a little bit. The recent performance alone makes it a good idea to have some gold, but the future performance could make it a better idea. So let's call it good there. Do you think we've seen the near-term top for gold, $3,500? Do you think we get a break now for a few months? Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.